Hi, I'm Jason Kelly with the Kelly Letter. Let's talk about this market, which has everybody in a tizzy, understandably. Any bear market is hard, but this one, which was caused by a pandemic, is especially hard to take emotionally because there are concerns beyond the market. Are we ever going to go back to work? Will our families survive? Will I personally be okay? These are real issues. And I don't want to downplay those, even as we look at the rational side of analyzing the market and the economy. On the virus itself, there hasn't been much direct economic impact. The death count is still low. I don't mean to minimize the pain this is causing anybody, but as far as economic impact, it is so far negligible. And I believe it's going to turn around quicker than we're seeing in media. People are now projecting a 3-month shutdown in America. I even heard the governor of New York, Andrew Cuomo, say that it might go until Christmas. I highly doubt this. I'm talking to you today from Japan, and things are creeping back to normal here because Japan has focused on the death count and the serious sickness count rather than the infection count. The idea being that if a person is suffering no symptoms from the virus anyway, why do we have to bring them in for testing, much less treatment or hospitalization? So far, so good. Now, some epidemiologists and other medical experts say this might not hold. There might be a second wave. We can't know, but so far, so good. America's a couple weeks behind on this timeline. So it looks like in America, there's now the panic going on, the, oh my gosh, our case counts are going to go up. And the natural conclusion or jumping ahead to this idea that we're going to see a bunch of deaths, and maybe in my neighborhood and my family. If the American experience is similar to the one here in Japan, that will pass. And it will pass without the giant death count. And things will start to get back to normal with restaurants opening, schools opening, people going back to work, etc. What you knew as regular life just 1 month ago. Now let's focus on that for a minute. These economic data coming in recently are very bad. We're hearing about 20% unemployment rates, 50% unemployment rates. The word that's missing here is temporary. This is a government-imposed, understandable, but nonetheless government-imposed economic pause. It is a pause. When we're past this and people do go back to work, the numbers are going to go back up. Now, my personal suggestion to government, which has been ignored and will continue being ignored, was to simply shut down the entire economic system. No payments made to anybody anywhere. The stock market closes. Everything just goes into a deep freeze while we combat the virus. This would have caused, instead of this crash in the chart, this would have caused a pause in the chart. You've probably seen charts like that. It goes along like this, and then there's a gap, and then it resumes on the other side. That's what I would be going for stock market-wise. Instead, it looks like what we're going to get is this nearly vertical crash. That's what has everybody's face white right now. This nearly vertical crash as the economy is stopped. And then the economy comes back online. We're going to get a vertical recovery, maybe. Who knows? I'm not predicting that. Just saying that's the path we've been put on with our current set of policies. Does it mean that the thing to do is sell because the economy is permanently shot, the stock market is never going to come back? No, it doesn't mean that. It is always darkest at the bottom of a bear market. And this is a very fast one. That vertical drop is a real head spinner, no doubt about it. But we're seeing government and the Federal Reserve and other governments and other central banks taking the right measures to prop this back up. Just yesterday, we saw the Federal Reserve say that it is going to unleash unlimited quantitative easing in the mortgage-backed securities market. Eventually, that could move on to the equities market, could move into the high-yield bond market as well. Unlimited QE, now for those of you new to this, QE is just the buying up of assets. Unlimited, that is quite a magical combination of words. If the Federal Reserve steps in and puts a floor under the stock market by buying shares of broad-based stock index funds, that could artificially provide that sort of gap in the chart of us talking about earlier. We go down, we go sideways through the rest of this, courtesy of the Federal Reserve holding up the market, and then we eventually come back to a normal economy when we get back online here. I don't know that that's the way it's going to go. I do know that it will never feel comfortable to buy into these low stock market prices. At the very bottom, the news will be dark. On the recovery, the news will be dark because the bears will warn of further waves, further trouble coming ahead. And the thing to remember with the bears is, for 10 years, they warned you the market couldn't keep going higher, and every reason they told you didn't matter. And the one thing that did kill the bull market, that did matter, this pandemic, they never mentioned. So they were wrong on the way up, and they're wrong on the way down. They're going to be wrong on the next way up too. So don't pay any attention to that. They always say it's different this time and it's not going to work and we're not going to come back. And it just doesn't matter. You know what to do when prices are low. You buy. You buy or you hold. You do not sell. That's it. Eventually, the virus is going to be gone. We're going to have a lot of stimulus on this market and this economy, and we're going to see these arrows turn up, and people who stuck it out are going to recover. Just ask yourself, even if it takes a long time to recover, even if it's a less aggressive recovery than it was of a drop, if we don't go vertically back up, how better to participate than owning stocks? What else are you going to do? Sell at the bottom, move into a bank account for safety, and watch the market recover without you while the bears say that it'll never recover? These are rhetorical questions, of course. It will recover, the economy will be fine, and when we do get back online, probably sooner than you think, given the low death count that is not reported in media because they prefer to focus on the high infection count, then I think all that stimulus is going to pay off and we're going to see a roar back higher. And the only way to benefit from that is by sticking this out. And if you can bring yourself to do it, follow the signal system or whatever you need to follow to buy into this, you will one day look brilliant for having done so. Back to you soon. Thanks for watching this one. Hang in there.